Crypto market update, Bitcoin and ETH short-term price action versus the 2026 macro trend. Hey guys, it's Keith Allen back from the holiday break, refreshed, recharged, ready to take on whatever the market has to throw at us. And I've been kind of quiet through the holidays, but I've certainly been paying attention to the charts. And I've taken a deep dive into both the Bitcoin and ETH charts across multiple time frames. And that's what we're going to dive into today to give you really a good, I think, working framework to build, if you haven't already done so, or refine your strategies for 2026. And there are some conflicting signals across different time frames, and we're going to put it all together in context and come to a conclusion that I think makes a lot of sense. So without too much fanfare, we're going to jump into this pretty quickly as per normal. Well, first of all, I hope everybody had a fantastic holiday. Wishing everybody a phenomenal, happy, healthy, prosperous, and joy-filled new year. And even though the market has freaked a lot of people out and shaken a lot of people out, and a lot of people have left because they got shaken out, I think there's great opportunities to make money, especially with the price action we're seeing right now. So I don't want you to be discouraged by any bullish tones or bearish tones or anything that deviates from what you have in your mind here, because there's something for everyone in this analysis and in this market. So we're going to get into this and we're going to go deep. So grab a pen and paper before we start. As per usual, if you'll do me the solid favor of smashing some buttons to help me grow this channel, hit the like. Make sure you hit that subscribe button so you don't miss any of the future streams. I drop the free alpha here on the regular. And do me one more favor right now, right this instant, before we get into this thing, share this stream with one of your friends, one of your fellow crypto traders, or better yet, one of your communities. And let's share this thing and let's trade smarter together. Okay. So as it stands, Bitcoin price is pumping pretty hard today. We're up about 3% on the day so far, and still climbing. More importantly, we've been working through some key resistance levels, and we're gonna take a look at what those are, what this means for the short term, and how it plays into the longer term scenario and signals. Okay, so let's go ahead and get into it. I'm going to start by sharing the candle chart. Want to remind you guys, as always, that the live chat is open, and these streams are always better when you guys participate and engage with me. It's not only more fun for me, it's better for you because I'm going to do my best to answer your questions directly. And of course, if you have insights you want to share with us, by all means, please do so. So let's go ahead and start. We're going to start on the candle chart because, well, that's the one that I have up right now. So let's go right here and head over to TradingView and see what we have in store here. So as you can see, we have just now, for the first time in a long time, punched through the 2025 yearly open. We wicked through it a couple of times here back in the beginning of December 3rd, December 4th, again on the 9th and 10th, even a little bit on the 11th, and then we've not been there for a couple of weeks, right? We actually broke down through this level on November 17th. And so this is important that we have in the past several days, we have regained the 21-day moving average. That's the green one. And here in the past few days, the red 50-day moving average, not to be confused with the 50-week, but the 50-day moving average here. And price now pumping at 94,500 and still going. So let's just get a quick glimpse of what's fueling this here. You can see that in the order book, we had this wall, and this wall appeared before New Year's, and it was a solid $111 million. And I said at the time that I thought that this was not likely to get filled, that these guys were likely to um, attempt to be doing some liquidity herding, and, and we would probably see this move or get roof pulled before it ever got hit. And as you can see here, it started to erode pretty quickly. It went from 111, 112 million down to 98 million, and price started to appreciate on that. As this started to um, evaporate, price started to appreciate. And so we pumped through the New Year's holiday, and we again saw another block come out of this, went from 101 million down to 91, so $10 million removed. And then, gosh, yesterday, the ultimate roof pull, it came down. They pulled it. Now, some of this may have turned into market sell orders, but certainly not all of it. And as you can see, price now pumping through it with the help of some bid liquidity moving upward. Let me just do some filtering here, and you can see that we had, blocks of bid liquidity moving up, and we have a little bit up here. Not a ton, but there's about 10 million bucks right here around that yearly open level right now. So obviously we're now starting to meet some resistance, but these resistance levels have been beaten thus far. 95K has a good 41 million sitting on it. And we have another block of another 26 million at 97K. And so that's to be, something to be watched here. And we'll watch to see how the order flow is moving with it, right? Who's buying, who's selling, et cetera, et cetera. So back to the candle chart here, and we can again see that Bitcoin is pumping. I told you I was going to look at ETH as well, so we'll take a quick look at the ETH chart as well here. Go to the daily, and we can. Oh, 1 second here. Let's make sure we're adjusting. There we go. That's better. So you can see ETH also pumping. This right here, I'll show you what that is in a little bit. We'll get back to that. Okay. But ETH obviously clearing some, essentially the same 21-day and 50-day moving averages here over the past couple of days. And now we're looking at more important levels like the yearly open. And, here's our 2026 yearly open, and the 2025 yearly open is up here. These timescape levels. We're going to get into all of that here very, very soon. So back to Bitcoin. Bitcoin had quite the year, right? We had an 11-month uptrend that started with the Trump pump back in November on election day. That took us really to new highs, right? We essentially broke this long time resistance level at the 2021 top, and then literally election day came around, and boom, we pumped. Brief consolidation here at 75 at that 75K level, then moved up into the 90s, high 80s and 90s level, consolidated for quite some time, had a bit of a breakdown, double bottomed down here at 75K. And you can see we had this early consolidation here, then we double bottomed here, and then another rally where we unwound this death cross, and we saw things start to take off there. But after an all-time high on October 6th, things broke down, and we have now find ourselves with a red yearly candle close, which you can see here. We missed it by like 6.5%. Just on the yearly. So barely, not a horrible red close, but a red close nonetheless, right? After the year that we had and all of the bullish narratives that we heard, we thought, gosh, we're going to have a green close, and we didn't. I honestly expected to see price challenge the yearly open. a little bit better than it did around the close. But I wasn't too surprised that things played out the way that they did, because we had a wait, that's not what I wanted to do. I want to turn on timescape levels. Uh, because we've had that rally ever since, right? Bit of a fake out. And that's something that you have to remember with this market. This market wants to punish as many people as possible at any given time. Fake outs are the norm. And so you think of any scenario where the most people can get wrecked, and that is likely the one that the market wants. That's the curveball the market wants to throw at us. So I was just speaking of the yearly open here. I'm going to put timescapes on here to see this a little bit clearer. And so we had our 2025 open. You can see, I'll expand it here. The 2025 open was up here around 93.3. We ended up with a yearly close and a 2026 open at 87.5. A lot lower. I really thought that we were going to challenge that. We really, it just didn't happen, right? So there were some glimpses that it might happen when we started seeing these wicks like this. December 29th, we had a wick up to above 90K, and I thought, oh, hey, this really might play out that way, but it just didn't happen. And then, of course, January 2nd, we start, watching these wicks grow. This is where it gets good. This is probably the most bullish look you're going to see on the chart right now. And this is a short term, right? So we're talking about a daily chart. I guess it would look more bullish if I went even shorter term, right? And so something to remember here is short term, low time frame charts will give us some insight to what's developing. However, it's the higher time frame charts that are really more reliable, especially when it comes to a macro analysis. So looking here on a 4-hour chart, for example, we can see that the key moving averages are unwinding, right? Golden cross, right? This is a big deal. This is a big deal. And if you're a day trader, you're a swing trader, this is the time frames. These are time frames that you're likely more focused on and honed in on. The fact that we see these golden crosses, the green 21 moving average has unwound the red 50, the blue 100, and now the purple 200. And now we see the red 50 has unwound the blue 100 and the purple 200. And so this is all getting drawn up. If this trajectory continues, then we will completely unwind here. Hasn't happened yet, but on this trajectory, this looks very bullish for Bitcoin, right? And the fact that we at the moment are above this 2025 open, also a big deal. So a couple of themes I want you to remember throughout this analysis, and write this down. One, like I just said, is high time frames are more reliable than low time frames when it comes to analysis and predicting the future. That's one. Number two, it's not where you start, it's where you finish. Wicks don't mean shit. It's where we close. So we could wick up to the moon, but if we come back down and close below this 2025 open, then this really, that would be an indication that this isn't sustainable. As it stands, this candle already grew with a wick because it started below this level. And so you want to see full candle bodies above this to start, having confidence that this is going to, potentially grow into something more sustainable. As we step out in time frames on the daily chart, okay, you can see this is, now I have these two timescape levels up. This is the 2026. Here's the 2026 open down here. And here is the first weekly open of the year, which started today, right? On last night's candle close. And so historically, when price has appreciated from the quarterly open, in this case, the quarterly open is also the yearly open, it has reverted from the first weekly open of that time frame. Now, this candle's not done yet, right? So this day and this week is not over yet. So we could continue to see this go upwards, but where are we at the end of the week is what I want to know. And so this is something to keep an eye on. And conversely, if the price had gone down from the yearly open, then we would typically look for a support. If price had gone down from the yearly open, and then the first week, weekly candle has historically provided a bounce that then sends us to a retest of resistance at that yearly open. So it's like this: if this is that quarterly or yearly open, and price moves up from there, then on that first weekly open, then this serves as local resistance and forces a support test down here. And just the opposite happens if price moves down from the yearly open, then this serves as support and it forces a resistance test up top. So again, too early to see this, to call this because the day is still open. And we're seeing a lot of strength right now. So just because it's happened that way historically, and quite frankly, with 100% consistency, doesn't mean it has to do the same thing this time. But, it's about probabilities at this stage. And let's be fair and look at ETH and see what it's doing relative to its open. ETH also had essentially the same kind of ending to the year as Bitcoin. There was the Trump pump took us up there back in November, right? November 2024, we had that Trump pump that took price up. And in terms of what it did for ETH, a little bit different than what it did for Bitcoin, right? So ETH had that run that ran it to a double top, not an all-time high, but a double top. And then just a nasty, nasty fall, nasty decline from there. I mean, the drawdown was what? I mean, this was a big deal. 66%. That's like full bear market stuff right there. And then a really nice recovery here. But where it got underwhelming was the fact that the all-time high was like barely an all-time high. So a massive move, 254% to the upside, big move. But the underwhelming part again was that, we ended up shy of $5,000 per ETH. And I think that took a lot of wind out of the sails of people, and we had Tom Lee blowing his narrative like crazy, right? We really, and I followed it. I'll be honest with you. I followed that narrative. I was not really an ETH investor at the time. And I'd started accumulating ETH because I like Tom Lee and I like the narrative that he was building around. It made sense to me. Not just that he was starting an ETH treasury. I don't care about that. It was the reason for the ETH treasury. And the reason for anybody who hasn't been paying attention is largely focused on the fact that the new financial system is being built on ETH. And obviously there's also some staking rewards available with ETH that aren't currently available with Bitcoin. And so that was, to me, seemed like a good play. But this is why I stopped trading narratives. Because if that narrative was truly as bullish as it sounds, just as all of Trump's hot air was truly as bullish as it sounds, then price would never be moving against us, right? Price would never be moving down, at least not to this level, not to this range like it has. So that's something I'm very, very conscious of. I'm also very conscious of my battery power right now on my laptop. So I'm going to pick up the pace here. So in any case, we ended up down 5.5% for ETH on the year. and Bitcoin down 6.5% on the year, which was, needless to say, disappointing after this kind of price move. So now let's dive in a little bit deeper. In mid-December, I shared something with you guys, and this is how we're going to build the narrative for this whole analysis. In mid-December, I shared something with you guys that was something that I've honestly not seen too many of. Actually, I've not seen anybody else share this, and this is something I just call the December 17th pattern. There's a macro reversal or a major move that happens around every December 17th. Yes, it was one time it was on the 16th, and one time maybe the 8th, 17th, 18th. But in this range, we've seen this. And if we go back to December 17th, 2024, both Bitcoin and ETH broke down right at this time. And this year, we're still kind of deciding this move right now. And today, is the first time we're seeing things maybe give us some direction on this, unless of course it's a fake out. But on December, in this at this time, we saw a rejection from the 21-day moving average and support from the 100-week moving average. And we've been waiting for some clarity on this. So support on this weekly moving average, certainly good, certainly a bullish sign. But this has been in the wake of a RSI that has been sub 41 and price action that has been sub 50-week moving average. So price has been below the 50-week moving average and the RSI has been low. RSI is spiking right now. Again, I don't, when I see this move, I don't go automatically and say, oh, that's it. We're breaking to the upside and the bull market is back. Doesn't work like that. I need more than just one single data point to give me any conviction about anything. And so I'm looking for multiple things. One, I'm looking for, yes, reclaiming all these levels is good, right? No, there's no disputing that one whatsoever. But there are a couple other factors here, and I'm going to clear this out. We now know what the deal is there. A couple other factors. Okay. So yes, the RSI has now nosed above that 41 level. In fact, let's see exactly where it is, because it seems to be, pumping right now. 44. It was at 43 earlier today. But this thing moves, and it moves fast and in real time. And so again, one of those things I told you to write down. It's not where you start, it's where you finish. So where do we end up here when this is all said and done? Where do we end up on the weekly close? Because this is a weekly metric I'm looking at. So this essentially is like a wick. Doesn't count for me. And so this is something I'm watching very, very closely. But in concert with this, I want to see weekly closes above the 50-week moving average. And I've been saying for a long time, ever since we lost the 50-week moving average, I've been saying we should have a resistance test at the 50-week moving average. I expect that to happen. And the fact that we stayed above this 100-week moving average kept us in the hunt for that. And so this is expected, and you can go back and look at my streams from days, weeks, whatever, months. How long has it been since we lost it back in November? So it's been over a month. About 6 weeks. I've been saying we should get a retest up here, and I've patiently waited for that. So that seems to be developing right now, perhaps. So let's see if we hold up here. So yes, being above the yearly open, the 2025 yearly open is good. Yes, being above this year's yearly open, certainly good. And if we would remain above today, this week's open, that would also be bullish, but that would be, this would be a deviation from anything we've seen in history, and that there was no reversion to go test support. So I think we will see that support test, whether it comes this week or in the next couple of weeks, I think that we are setting up for rejection at this range, and here's why. Let me switch on a couple of things. First of all, this trend, right? Today's the first day we're reclaiming this trend, which is certainly bullish. But there's something else forming here that deserves our attention. And this is where I am really concerned about the future. As you can see here, and I have these little dotted lines that are basically an extension of the 21-week moving average and the 50-week moving average. And they've adjusted a little bit. So let me just do a little tweak here. Okay, and that one looks pretty good. Okay, so what I see here is an imminent death cross. And that's going to happen in the next week or two. Probably not, by the next 2 weeks, that's done. And so historically, a death cross between the 21 and the 50-week moving averages is not pretty for bulls. Here, let me clean it up a little bit. It's not pretty for bulls. Okay, look at this. Nasty. Hasn't happened a lot, but when it does, it's nasty. So this is fully what I expect. Now, I'm not necessarily saying that we're going down to the 200-week moving average, but we could, and that would put us, depending on when it happens, look where that takes us. Okay, anywhere in this range to me is fair game. What will end up being support? Will it be the yearly open? Will it be the 100-week moving average? Will it be the 200-week moving average? Will it be one of these other consolidation zones? All of that remains to be seen. So these are things that we really need to pay attention to. So if you'll bear with me for a second, because my battery's going fast, and for some reason I didn't have it plugged in. I'll tell you why I didn't have it plugged in. My daughter's been home from college. She's been using my office as her bedroom for the last couple of weeks, and she just left today. So give me a second, and I'm going to go get my charger. In the meantime, I'm leaving you with letting you watch a live shot of fire charts, and we can see what's happening here. As you can see, there's been some good buy volume and some bid liquidity moving upward, and resistance stacking here at 95 and at 97. I'll be right back. Sit tight. Okay, I'm back. With power. Sorry about that. Thanks for bearing with me. Okay, so just to catch up. So we're looking at this imminent death cross. And so what I fully expected, and I've been saying this for quite a while, I drew this a couple of weeks ago, and I've been, sharing this with you guys for over a month. This to me is like the eminent play. And so the fake out that I'm expecting is developing right now. Now, that doesn't mean it's going to actually develop into a fake out, but this is what I think is going to happen based on what we're seeing here in the charts. And this could certainly get invalidated, but these are the levels that you got to watch. So, so just humor me if you will. Let's say that we continue on this trajectory. You know that's going to lure in. First of all, you know shorts are getting squeezed right now to holy hell, um, and that's only going to get worse. That's number one. Number two, if this trajectory continues, you know that all of the hopium addicts are going to be aping back in to Bitcoin and alts and their favorite shit coins. And I fully anticipate that to happen. And what happens after that? Pain, ultimate punishment. We have this death cross, maybe a wick up, and then a nasty cascade down. And so this is what I'm preparing for based on what I'm seeing in the charts here. Now, this is not just based on speculating about this death cross. This is just one more data point to put in your analysis to give you some context. So let's now, and I want to review my notes to make sure I'm hitting all the things that I wanted to talk about today. This is where I think a lot of people are going to get tricked and trapped, right? Is because of this, people are going to start aping back in. And there's some great trading opportunities here, no question about it. But I would be very cautious. Number one, I would be watching for today's close to see if we revert back down or if this momentum continues. And we can get some clues about whether or not this momentum is going to continue based on the order flow that we're seeing here and where the liquidity is moving, right? If bid liquidity comes in under price and holds and pushes price up, then we can indeed eat through these things. and likewise, if we start to see rug pulls, then we're going to see price drop back down. Now, this isn't very heavy here. There's a bid ladder here, but these aren't heavy concentrations with bid liquidity, so it won't take much to fall back through this. And like I said, at some point in time, whether it happens today, next week, next month, there is going to be a retest of the yearly open timescape. I can, I'm banking on that. And so that yearly open, where were we? Remember? On the yearly, we were down at 87, like 87.5. So I'm fully expecting that to happen at some point in time. Again, whether it happens tomorrow, by the end of the week, or by the end of the month, or maybe even next month, remains to be seen. But I'm watching, and I think it times out well this bullishness that we're seeing here on the short term, even here on the daily chart. Look, we see a trajectory where the green 21-day moving average is on an imminent golden cross with the 50-week moving average. That's exactly the opposite of what's happening on the weekly chart. And this is why I say it's important to make note of what's happening on the weekly time frames. So Flow State is asking, what level would unwind the death cross at this point? You're speaking of the death cross on the weekly, I imagine. So on the weekly, at this point, I don't think it's possible to unwind the death cross. I mean, these are lagging indicators, right? So a God candle might make it a shallow death cross, right? It might not last very long. It might be something like, I guess there's a chance it could revert, but it seems like, we could get something like this, but I think there's a greater chance that we indeed get the death cross, and maybe it's a shallow one like this, and we recover relatively, in a relatively short amount of time. And of course, there's any number of things that could serve as a catalyst to push price back up, right? Could be resolving geopolitical tension. Pick your favorite spot in the world. Insert any spot in around the globe. It could be the solidification of some crypto-friendly legislation. For example, the Clarity Act, which has yet to pass through Senate, could be the Trump could actually deliver on some of the things he's promised, like a Bitcoin reserve. It's all been hot air at this point. There's been no actual explanation or action taken, as far as we know, that actually establishes that, other than the Bitcoin that the U.S. government already holds from seized assets. So those are just some of the things that could serve as a catalyst to really push things back into a bullish trend. So again, I want to flip back to ETH and make sure I'm doing it justice here in these time frames as well. So we looked at ETH here on the shorter term. Again, short term looks really nice for ETH, but as we step out in higher time frames, we see a recent death cross on the 100-day and 200-day moving averages. We see the 50 and 21 really running parallel. We might get a golden cross on the shorter time frame and with a death cross on the higher time frame. It would take some time for this to pull out, but that in itself isn't horrible. As we step out, again, death cross between the 50 and the 100. So that's bearish. The longer we go, the rougher it looks. Now, today, this is the monthly candle, mind you. Today, we are, for the first time, pushing back above this 21-month moving average. So this is a good sign, but again, it's not how you start, it's how you finish. And so we've got a lot of time for this monthly candle to close. Can ETH price stay above the 21-month moving average for all that time? That's just another thing to watch. And let's take a peek at ETH real quick. I haven't looked at ETH on fire charts in a minute. It's been a hot minute. So let's see what's happening here. We see some selling happening here on the low time frame. Whales are selling a little bit at this level. We see ask liquidity stacking at the 329, 330 level. As we zoom out a little bit, what you want to see is more bid support coming into this range here, and at the moment is gone. So let's now go back to the candle charts, and I want to introduce another indicator to you. I'm going to take timescape levels off, and I am going to add trend precognition. And trend precognition thrives in higher time frames. In fact, the higher the time frame, the better. So we had on December 31st, we had, of course, our daily close, but we also had a monthly close. We had a quarterly close. We had an annual close, 12-month close, and a 6-month close for that matter. So let's look across all those different time frames to see what kind of signals we may or may not have received from trend precognition. So let's go to the weekly chart. Nothing on the weekly. We go to the monthly chart, and we can see we have a monthly signal for trend precognition on the Bitcoin monthly chart. It's not especially strong. It's a 27% probability. And I'm watching to see if this number grows or shrinks. Does it pump up from 27, or does it fade back to 25 or lower? Probability score below 25 would not register a signal. And likewise, a dump below, let's say 87.5, a dump below the yearly open would invalidate this signal for me. On ETH, actually, let's do Bitcoin first across all these time frames, and then we'll do ETH across all those same time frames. So this, to me, is an indication that we're going to see price pump here in January, which is already happening. And now we go to the 3-month, and we can see there's no new signal on the 3-month. This is the A2 plus algo up here with the arrows. I want to take a look at the A1 algo and just see if the A1 slope line is giving us any indication. It's relatively flat. It's up a hair, but it's relatively flat, which means that momentum isn't super, despite what you're seeing today, momentum for the month is not super strong. Now, this changes in real time, so this could adjust here through the course of the month, but at the moment, it's not impressive. So let's just leave it at that. And so, well, let me get these out of the mix. Clean it up. Sorry for having so much stuff on the chart, guys, but like I'm tracking a lot of stuff for you. So on the 6-month chart, we do have a signal, and it's a pretty good one. That signal is at 40, has a probability score of 48. That's pretty rock solid, in my opinion. Which tells us that in the next 6 months, we're not likely to see a new all-time high out of Bitcoin. That would be consistent with the bear market scenario that we've been painting here since the November close. And that would make a lot of sense. And it's fine. We just because we're in a bear market doesn't mean that we can't have rallies, much like the one that we're having right now. And these resistance tests and the support tests, they all need to happen regardless of where we are. So if we're pumping into January and potentially even through the first quarter, that depends on how high we go, depends on whether we continue to pump through the quarter, or we're just going to, get this pump and then maybe fade back, go test support and run the range here for the next couple of months. That's obviously something we're watching very, very closely in terms of how price reacts around these key levels, the moving averages, and the timescape levels. Now, on the 12-month chart, guess what? Guess what, fellas? That's another short signal, probability score 42. This, again, is consistent with what we expect out of a bear market. This would indicate that there's a low probability that Bitcoin will form a new all-time high throughout the year in 2026. And if you look at the history of bear markets, they've all lasted about a year. So that would make sense, right? The price degradation really started in October. So we could go through October and not until we really see, or beyond for that matter, without a new all-time high. At least based on these signals. But again, we don't do anything based on any one signal, but the fact that this signal supports this signal, right? Back-to-back timeframes. This is, and they're strong signals. That's a pretty solid indication for me. And the fact that we have this bit of mystery, right, between the monthly, the 3-month, and then what happens the second half of the year, that would all be consistent with the market wanting to shake out as many people as possible, right? So that makes a lot of sense to me. Monthly, again, shows long. Quarterly, no new signal on the 3-month chart. Could be an indication that we see price rise through January before a reversion and possibly ranging through the first quarter. 6-month shows that short signal on the 6-month chart. Good probability score. A lot could happen that can invalidate it, but at the moment, it's certainly easy to build a case for a price drop after maybe a test of resistance at the 50-day moving average and this death cross which is coming, right? I mean, I could see price even pumping through it, and if it happens soon, and then the death cross comes and then the breakdown occurs. So now let's look at ETH across these same time frames and see if we have a different story or a similar one. ETH on the monthly. Let's go ahead and turn on trend precognition. ETH on the monthly time frame. Little tiny signal here. I want to see what that score is. Probability score of 25.8. So these signals don't even register below 25 the way on the default settings. So this is not a very strong signal at all. Again, watching to see if it adds strength or loses strength here in the coming days. That'll give us an indication of whether we're going to see momentum strengthened or weaken from here. On the 3-month chart, this is where we have some difference. On the 3-month chart is we have a short signal, and this one is at 62. This is arguably the strongest short signal we've ever seen in the history of ETH in this time frame, right? We don't have a lot of these signals. That one's 52 and a half. This one was 32. This one was 61.6. This one at 62.5, strongest short signal ever. Needless to say, I have a lot of confidence in it. What looks good here, though, and before I eliminate this 18.2% drawdown, let me just show you what that was before I clear it. That would be I guess that was something I measured from when we were back here in November, hovering around this 50-week moving average. That was the difference down to the 200-week moving average. I guess that's kind of irrelevant right now. But that could be a support level. Back to the monthly, just clearing this for the first time in a couple of months. And on the 3-month, finding support here, as you can see through ETH's history, we've only had a couple of months that punched through it, but we've got recovery, right? Both of those months straddled that 21 moving average on the 3-month chart, but it has always served as support ultimately. Sure, a wick is a wick, but that would mean that 2,500 range still looks pretty solid for ETH. Now let's move to the 6-month time frame. See if we have any signals here. Nothing on the 6-month chart for ETH. And as I mentioned, trend precognition really requires some historical data to actually give a signal at all. We don't have enough history on ETH to give us a signal on the yearly time frame. So a bit of mystery here, right? ETH looks good on the monthly, looks bearish on the 3-month, and the 6-month we don't have any clues on the 6-month or the 12-month chart out of trend precognition, but we can work with the moving averages and we can work with the timescape levels to gain some insight as to how things might develop. What are those invalidation levels, et cetera, et cetera. And so we certainly want to pay attention to these timescapes. Bitcoin has today broken through the 2025 yearly open, and ETH has not made it there yet. More importantly, both assets are up from this year's yearly open, and for the moment are up from this week's weekly open, being the first weekly open of Q1. That's significant. We need to watch this candle right here. We need to watch how price reacts around this level really through this week. Historically, when price moves from here up, this level will serve as local resistance and force a support test back down to this range. We have a lot of strength in these two moving averages, all in this range as well. So I'm liking this level of support around that 29.66 range for ETH from here, at least on a lower time frame. What I just told you, 2,500, that's a higher time frame target. And again, we look at weeklies. We see support here above the 50 and the 100, although they are currently death crossed. On the monthly, climbing above this 21-month moving average, and et cetera. So the bottom line is short term looks better. Short term looks bullish. Longer term looks bearish. But on the ETH chart, I would say there's less. It's a little less conclusive on the 6 month. Actually, a lot less conclusive on the 6 month and 12-month time frame than Bitcoin is at the moment. As you can see, we have those solid ass signals for Bitcoin on the 3 month. On the 6 month and the 12-month chart. So if history rhymes, certainly doesn't have to repeat itself, but it does like to rhyme. And if it does, then, despite the fact that we don't have clear signals on the 6 and 12-month chart on ETH, I think it's probably a safe bet to let the dominant asset be the guide, as it has been all along, right? Hey, maybe it means we get a divergence and ETH rallies, but it's been a long time since we have seen that kind of scenario where Bitcoin dominance is fading back and giving way to ETH. We are still hovering at 59% for Bitcoin dominance, and ETH just chopping away. Has not had a lot of success. And alts, of course, having a nice run today, but man, I would be really, really cautious about alts. Yes, there might be some quick money grabs, but you really have to be careful. This is really a time for discipline and data, more so than being a degen and hope and getting high on hopium. That's just me. You do you. So I think that covers a lot of the ground that I wanted to get in today. In closing, I think Bitcoin and ETH are both at critical inflection points. Higher time frame data sending a very different message than the short-term data. So this means in the short term, we have some bullishness, and we need to approach that bullishness with caution. And we know that the invalidation levels are exactly as defined, right? We've got the yearly opens. We've got the timescape levels. Let me turn them back on for us. We've got the timescape levels that we want to watch closely. We have the moving averages that we want to watch closely. And we have the RSI that we want to watch closely. And we have this imminent death cross on the weekly time frame between the 21-week and the 50-week moving averages that I think are going to play out here mid-month, January. So be mindful of that. And for those of you that have followed me for a while, I've talked a lot about that weekly RSI. We are, for the moment, moving above this. This is really the RS flip line on bull and bear markets for me. And so we are here for the moment. But like I said earlier, this is like a wick. So it really only matters where we close. Not how you start, it's how you finish. So at the weekly close, are we still above this? So that would be part of it. And then the other thing I'm looking for is weekly closes above 41 on the weekly RSI, and weekly closes, full candle bodies, above the 50-week moving average. If it happens this week, okay, if we push above the 50-week moving average this week, that will not in itself count because the candle spans both above and below that moving average. We will need to see the next candle live its entire lifespan above the next weekly candle, live its entire lifespan above the 50-week moving average, without any wicks below to give me confidence to start adding long again. I guess the summary is I treat this as a bear market rally until it's not. It looks awfully bullish right now in the short term, but the long term outlook and the long term signals are overriding that for me. Let me take one quick look at the notes just to make sure. I've got some pretty detailed notes in the description, by the way. If you want to read through this and gain some additional insight, I'm not going to read this script for you word for word. You get the gist of things. Hope that has been insightful for you. Hope that gives you some tools to trade smarter, at least some knowledge to make some decisions on. For me, it's very simple: short-term bullish, long-term bearish, and so I have been taking profits on this rally. I I do have a long-term position. I'll be maintaining some of that, uh, depending on how price action develops. But I am taking some profits here in this range, and I'm happy to do so all the way up as high as we go. And just remember, generational wealth is not built in bull markets. It's built in bear markets. It's built in downtrends. It's realized in bull markets. So if you're not taking profits when price is going up, you may want to rethink that. Buy when price is going down, sell when price is going up. I'll leave you with that nugget. It's something that you should all know already, but I want to make sure that we're all moving into 2026 with not only a good understanding of what's happening in the charts, both short term and long term. But I want to make sure that everybody understands, especially the new traders who are coming into the stream. I want to make sure that everybody understands the rules of engagement and how you become a more disciplined, long term trader, right? If you can master discipline and you can master risk management, you can stay in this game for as long as you want. Okay. You don't win them all. You just got to win more than you lose. And I think that we are in a situation that even if we have a bear market, there's plenty of opportunities to make money, because even in bear markets, you have rallies like the one we're having right now. And this is a great chance to make money. I'm going to leave you with a parting shot of the order book. Let's go back to Bitcoin and see what's happening here. Just see if any moves are happening here. I'll tell you what, let's add some contrast into the chart, and we can see there's not a lot right here below us at the moment. Price is continuing to move up. We need to see more bids floating higher and higher in the order book to just keep pushing things forward here. As we zoom out a little bit, the fact that this has left us for the moment is certainly a positive, and it's opened the door. You can see as soon as it left, we saw price start to move up, and so potentially we can keep grinding upward. But you'll note that the whales, the biggest order classes, are selling in these pumps. And what did I just tell you a minute ago? Sell the rips until proven otherwise. I think you need to pay close attention to how price is reacting here. One thing I do not like here, and just in this swath of the order book right here, I'll pump the contrast a little bit more to help you see it. You see that we have this, not a huge block, but like when you start to see things leave, that's not necessarily a good sign unless this turned into a market order, buy order. You don't want to see things eroding down here. What's good is that we do have some bid liquidity right under price here in this range, and this seems to be at the moment helping form a foundation for price to push upwards into this 95K level. That's the next level of resistance just based on liquidity. There's about 17 million sitting there on Binance. And once we, if we can clear that, then maybe this comes into focus. And of course, the ultimate test, the one that really needs to happen, is the 50-week moving average, whether it happens today, tomorrow, next week, a couple weeks from now, doesn't matter. It needs to happen at some point in time. And so does a retest of support at this year's yearly open. So regardless of how high we go and how long it takes to get there, at some point in time, this level will be retested at 87.5. I'm pretty confident in that. Gonna leave it right there, guys. It's been an insightful one, and it's been a long one too. I appreciate your patience while I dealt with my power issues, but I'm glad to be back in the trenches with you guys for 2026. If you haven't done so yet, make sure you subscribe to the stream so you don't miss any of the future streams, because I drop the free alpha on the regular. If you want to get it on the daily, make sure you're joining us inside our Material Indicators Telegram group. We got a free channel, great group of traders from around the globe, and we talk about this 24/7, 365. Links are in the description down below. You'll also find them on the X profile, on the YouTube profile, on the Material Indicators website, and on the CoinMarketCap profile. All right. Have a great day, guys. Better yet, let's make it a great year. Let's trade smarter together.